Hello, everybody. Welcome to the Two Stewards Show. My name is Mark, and I'm here with Brent.
Hey, Mark.
Trusty partner. And today we've got Daniel Foch. Welcome, Daniel.
Thanks for having me. Happy to be here.
Yeah, so Daniel, if you don't know, he's the host of, well, among other things, host of the Canadian Real Estate Investment Podcast. I think I got that right?
Canadian Real Estate Investor Podcast.
Investor. Yeah. See, I knew there's something there. So that's a fairly well-known podcast in the real estate space. And what else do you do, Daniel? I notice you got, you tell us.
Yeah, I'm a broker by trade, so I've always worked buying and selling real estate for investment clientele. During COVID, I think that kind of changed a little bit because the housing market really became the primary focal point of how people got into real estate, and people were investing more for housing. And so a lot of my research and background pivoted more into just making it accessible for regular people. So I kind of evolved more into like a content creator and a bit of a consultant, I suppose. So I actually do like research and consulting for lenders and brokers and real estate companies and developers. And so that's kind of my role right now, is basically like content and consulting. And in a lot of ways that crosses over into transaction advisory. I do a lot of dispositions for banks, so like power of sale work. And then the remainder would just be like helping businesses that are in the real estate space with their strategy.
Okay. But you're still doing a little bit of sales, right? I think you were talking about a multifamily the other day. Was that you or was that your partner? I can't remember.
I have a couple of multifamily power sales right now, and I have a couple of buyers who are looking to purchase in that space as well. So, I mean, I will represent people. Not opposed to it, as long as I'm the right guy to do it.
Yeah, no, but you still get feet on the ground too, right? Like you do a lot of data analysis, but you're also seeing what's really happening on the ground.
For sure. Yeah.
So, okay. So I have a question. I mean, I'm sure you're sick of talking about condos by now, but we're going to do it anyways.
Yeah, it might surprise you. Actually, I really enjoy talking about it. But
okay. I've underestimated the power of your nerdiness, sir.
Yeah, for sure.
And I know you just talked with Angry Ron about this topic, so a bit of a different setting for you.
For sure.
But yeah, we're looking at like huge numbers of condo completions. And I wonder if you could just talk about, sort of near term. And then as we look ahead 3 years, or as we look at now, like what do we see in terms of condo starts, and what does that mean in 5 years for this space?
Yeah. So starts, I guess we're still seeing starts. I don't know. They're not high, but they're, you're still seeing some projects that pre-sold during a better sales environment that are, putting shovels in the ground. Well, maybe not. I guess technically, like they don't measure it as a start until it's above grade. So like people were excavating, a year ago. So that's why you kind of still see starts elevated. Completions, I mean, we'll be seeing basically record completions. It should have been a record year this year, but a lot of those got delayed. Like their original completion date got delayed, so they got pushed into next year. But so I typically will just say, look, that there's 100,000 units that need to close over the next like 5 years. When
you say need to close, you mean like they're in construction, somebody's got to buy this thing. Okay.
Well, they're already purchased, or like 70%, you could say roughly, are purchased, because that's the number that the builder typically needed to hit their pre-sale target to get to construction financing. So you would assume or hope that 70, if not more, of those are sold. But the challenge is like the values that they sold at are not reflective of what they're worth today. So they sold for far more than they would be worth in present day. And so buyers don't have a really strong incentive to take possession of these things realistically. So it's becoming a bit of a problem for the GTA market, and you're seeing a little bit of it in Vancouver as well.
And maybe I should have picked my words better, but I guess maybe sales or like new projects happening, or like I from what I've seen, they've kind of fallen off a cliff. Like,
so I guess you have to yeah, I guess you have to think about like how the pipeline works. So, yeah, you're technically correct. So, the completions that we're seeing today, are projects that pre-sold in 2021, 2020, when the market was on fire, right? You saw record sales in those 2 years. And then what happened after rates started going up was basically pre-construction sales fell off a cliff. So you saw about a 70, like we're running right now at about 70% of the long-term average. And so the pre-sales are the necessary mechanism to fund the builder. So basically the way it works is a builder will sell a bunch of units, pre-sell a bunch of units. They'll collect deposits. They'll go put an insurance policy on those deposits to make sure that everyone's protected. And then they're able to actually borrow against those deposits as part of their equity. Kind of. That's an oversimplification, but sort of like that. And then they are allowed to go. That's why they have to sell 70% to get to construction financing from their lender. That's not happening right now. Like you're seeing less than 30% of projects actually hitting their pre-construction sales target. You're seeing launches delayed or suppressed. And so we've got a potential big gap in the supply pipeline come 2030 when all of the units that ideally should have been sold today aren't being built because we're in a rate environment and pricing environment that nobody wanted to buy.
What's that gonna do though? Because that in my head, a condo serves a certain purpose, right? It's usually a smaller, who's occupying these things, what segment of the market is that? It's like entry level homes in urban cores, and what kind of impact is that going to have come 2030?
Yeah. Well, I mean, from my perspective, like condo supply had very much been absorbed by investors as rental stock. So
right.
Basically what it was like, I'm reluctant to use the word socialization, but it was like basically a socialization of purpose-built rental, right? So you basically made the purpose-built rental building into something that hundreds or thousands of speculators and investors could own individual units in. So I mean, ignoring like, well, I guess the there's a couple of like key problems here. So problem number one is, like I think you're alluding to, we built a ton of supply that like the market doesn't really need. We need, we actually have like the lowest number of single person households in the G7, second lowest maybe. And we basically built a bunch of hotel rooms for like, so investors are going to buy them. Then these single person households are going to go live in them. But we're actually seeing individuals now start becoming roommates or multi-generational households or staying at home with their parents longer. So these are all the complex problems I would say that we're probably going to face in the fullness of time. The way that I guess or the potential opportunity is, you're seeing a lot of missing middle, multiplex policy, etc., evolving to potentially fill the supply gap. I don't know if it's going to in its current form because the policy and lending environment just hasn't been ambitious enough. But if you're an investor today and you're able to build like a fourplex, or in Toronto they have this thing called major streets, so you can build like up to 10 units without site plan approval. There's so many different opportunities. I think that's going to backfill for a lot of the supply that we're mentioning, and that's a lot easier to build bigger units, right? Maybe more family size units or couples style units, or more comfortable living situations for a broader market rather than just like basically purpose built student rentals, or what I mean, like dorm rooms kind of.
Yeah. But those that missing middle housing where you're talking about the municipality opening up to allow just so that our listeners understand, like, yeah, it's like, threeplex, fourplex, five, whatever, going up, just mid-rise buildings. Is that like, in my head, if I'm building a condo building and I'm a big developer, I'm not going to consider transitioning my operation to like, I'm not selling condos, but there's an opportunity building like sixplexes down the road. Maybe I should get into that space. Am I correct in thinking that like these big guys, they're kind of just put on hold? They're not selling condos. What are they doing? They're not transitioning into building these smaller. Does that mean it's an opportunity kind of for the average guy to get into this?
Yeah, I mean, so I guess there's a couple of different ways of looking at it. So like I would say there's infill opportunity like, you know, a stacked townhouse development would be so high-rise guys like concrete builders probably aren't going to do it. I think you're right. I think if a builder's trying to decide between, you know, am I going to go buy a high-rise site or go buy a stick build site, and I've never built stick build before, they're probably going to try and choose the high-rise. But I think it's more important for the developers who are that's not the decision they're trying to make. The decision they're trying to make is, am I going to choose a stick build site or basically no longer be in business or go bankrupt or have to lay off my entire staff, right? Like, and that's probably where you'll see some people re-entering, or some developers entering the space where they can actually make money. I mean, the good high-rise developers with great sales programs, great reputations, you know, a great track record, like they're still going to sell units, they're still going to build units, they're still going to have viable projects. A lot of the builders who probably never should have got into that concrete space or high-rise space are, you know, a lot of them are we're seeing, right, going bankrupt. I think a lot more of that will take place. And so I think, and the ones who are smart maybe will diversify and downsize into projects that make more sense, because those projects didn't really exist before. Like, you couldn't build an urban townhouse site with underground parking 3 years ago, right? On a tight lot, or a 10 unit building. I mean, so I think you will probably see the bottom
just so
end.
Why, like for our listeners, why couldn't you have done that? Just so people understand.
The city of Toronto was basically the majority of the city of Toronto was zoned, I think it was like 75% of the land area was zoned for single family residential housing. And so now they've basically taken all of that and upzoned it to a minimum of 4 units.
Okay. Yeah.
So it sounds like, I don't know, investor profiles or investor preference is probably going to change from the condo space, right? You said most condos are investor bought, and effectively being purpose-built rentals, which I want to ask about too. But do you see like investors now moving from the condo space to, you know, the sort of the missing middle, or I don't know, even single family, probably not single family. And what does that do to the condo market? Is that opportunities for people now? Maybe if I don't know, is there going to be a catastrophic price collapse?
I think probably, like, we already had a catastrophic price collapse from my perspective. Like, I think we saw the biggest house price drop in Canadian history in Q1 2022. And so anyone who's praying for a crash probably already got it. They just need to realize that. We're kind of in like the grinding down phase, I think, of like, if you look at the 90s, I think the setup's almost identical, right? Like, the only thing missing was population growth, but now that's being kneecapped as well by policy. So we're pretty much on the exact same path as the 90s. So 89, you saw a spike in population growth. You saw a spike in house prices. Both peaked in 1989, and then they fell sharply. Population growth and house prices both fell sharply in 1990. And then they slowly grinded down from like 91 to 94, 95, depending on which city it was. It took them until like 2002 to get back to their nominal peak. That's kind of where we're at, to be honest. And so I don't necessarily see a crash. To answer the kind of the beginning of the question, I think that hopefully we'll see a pivot from like investor capital going from funding these high-rise projects to funding some of these more small cap projects. But the challenge is, like, it's not like the US where we have like a really good crowdfunding environment, as an example, or like a really good like exempt market. So exempt markets basically being like how you can fundraise for projects, like when you hear about institutional investors, et cetera. We have like the EMD system, which requires like an offering memorandum and KYCs. And it's just not, it's far less robust when you compare it to the US that has the Jobs Act, which was basically designed to allow businesses to crowdfund, like startups to crowdfund. In Canada, like, so basically like the pre-construction condo like sales thing was functionally crowdfunding, right? It was like allowing people who were unaccredited, sold these projects by realtors who were making, who knows what, like the promises that they were making, right? Like to some of these people about returns. And none of that would be allowed in the exempt markets, right? None of that would be allowed in the EMD space. But it somehow has been, and you're still seeing it. I'm seeing it now. Those people have pivoted from pre-con to, from Toronto pre-con to Calgary pre-con to CMHC MLI Select projects. And you're so anyway, what we need to do is like probably either actually let realtors like market equity and build a proper environment in which they can do that, or repair our recalibrate our exempt markets or our equity markets so that we can fund projects and funnel all of that capital. Because the challenge now is like a lot of the promises, a lot of the returns, a lot of all these things that these project assumptions were based on were wrong, but there's nobody to hold accountable for that because there was like 4 realtors on the deal plus the developer who wrote the original pitch book and somebody's friend who referred it to him, and there was an assignment in there. And whereas if you go to the traditional system, it's like somebody sells the equity, somebody executes the project with that equity, and they are the to frame it around the show, like they're the steward of the capital, right? They're supposed to be the ones who are protecting that for the investor. There's a degree of accountability there, and we miss that. There's something broke in that system, and I think we need to figure out very quickly, the capital market needs to solve this problem. Otherwise, we have a huge gap in 29-30.
Okay, I think some of that went over our heads. When you say let realtors market equity, what exactly do you mean by that?
Yeah, so To clarify, I don't actually think that that's a good idea, but that's functionally what they're doing, okay, right?
What they're doing, yeah.
They've functionally become like securities dealers. They're all promising returns, right? You can literally see. I have hundreds of screenshots of ads that are promising guaranteed 10%, guaranteed this much, right? And it's like,
so like if you buy this condo, you put this down, but you're going to get this much return, and that's the realtor putting that out there,
right?
Yeah.
So if somebody in the security space did that, they would be shut down by the OSC instantly in Ontario, right?
Yeah.
And yet we have realtors making these representations about projects, and they're functionally raising equity. Like the developers are going to insure those deposits, and that's going to become part of the equity in the project stack. And it's convenient for the developers that's you're getting this kind of like dumb money, let's call it, into the projects, right? This is your retail capital system in Canada that funds real estate projects, and it's not a good one. Like there are far better versions where people can be held accountable. Like in these situations now, the builder can actually sue the investor if the investor fails to close, rather than, you know what I mean? Rather than in the US, where if something goes wrong or the project doesn't deliver, the investor has recourse against the GP on the project, right?
So what does that actually do then? Does that mean that the developers, obviously they're more responsible, right? So they're putting forward better projects and they're not misguiding people. Realtors aren't there misguiding people into like guaranteed returns. So you don't have this big, I guess, groundswell of investors who are like, I'm going to get these returns, and then the market heats up. Like, I don't know, in Daniel Foch's world, like if we put a policy together for Canada's real estate market, and would that look a lot different
than today?
Yeah.
I think we need like a proper funding system for people to raise money from unaccredited parties. Like that's what, like, people were using realtors to do that. Like, and like, if you're gonna let it be a complete Wild West, like just do it like relatively properly with a crowdfunding system where there's accountability mechanisms and securities. Like these people are selling securities. Functionally, they're selling securities, right? It needs to be treated as such.
Yeah, it's an investment product at the end of the day.
I think it is. Yeah, I would agree with you.
Yeah. Well, I mean, if you're buying it to rent, like if you have no intention of living there, it's
which is kind of funny because like real estate, I mean, if you zoom out, it should be just to live in your house, right? Like it has a functional use. You want to live in a house, but we're talking Canada here, and it's like, it's just an investment vehicle.
Yeah.
I don't know. It's kind of sad.
So, hey, quickly, Daniel, you mentioned purpose-built rentals. Like, is there any hope for them? Are you seeing any, like, we haven't seen them in like decades, right?
Yeah, it's funny. Like 2 years ago, I spoke at ResCon, which is the Residential Construction Council of Ontario, and I'd mentioned to everybody like this was about to happen, and you should probably start pivoting your projects to purpose-built rental. And most of them told me some not so nice things about that proposal, right?
And yourself.
Yeah, and now I'm getting calls from these individuals saying, hey, like,
sorry
about that, about that rental stuff that you were mentioning. How do I do that? Right. So a lot of people just don't want to change. And so they've been building a product to sell it. They've been manufacturers for the past 25 years. Why would they become owners now? And I get that. I understand it's not easy to, it's not a simple proposal. I think that purpose-built rental has hope. I think that the majority of starts that you're seeing are coming from purpose-built rental. So if we go back to that original like fork in the road where the developer's trying to decide, am I going to do a high-rise or a low-rise project? And then am I going to do a high-rise project am I going to do a low-rise project, or am I going to go bankrupt or shut my company down or leave the space or whatever? There's probably a third avenue where it's, am I going to do nothing, or am I going to do this as a purpose-built rental? Like, because everybody wanted to do the condo project because you could get it with 5% equity down, because the other 15 or 20% was coming from investor deposits. That's gone now, let's say, right? You're only selling, that demand's down to 25% of what it was before. And the only thing that's going to fix that is either rates go to the floor, which they come down a little bit, but it's not just that, it's also prices, right? Prices have to come down significantly, and that's just probably not going to happen. So we're not going to happen in the way it needs to. So door number 3 is, okay, well, what if I have to come up with the remaining equity myself? So rather than putting 5% equity into this project, I have to go raise some equity in some other fashion. I can no longer rely on realtors peddling it to people through guaranteed returns of whatever, right? I now have to raise this equity in some other fashion. And then now they're going to go to the exempt markets, or they're going to go to crowdfunding, or they're going to go to, one of the challenges that we have here is that pension funds can't like directly invest in merchant activity. So they couldn't be selling condos, but they could invest in this kind of stuff as like eventual owners, like a forward purchase. So you're seeing a lot of stuff gradually adapting to accommodate for purpose-built rental, but the reality is like we're pretty far behind, because most of these folks thought we'd be recovered or in recovery already, and we're still on the way down.
So they're condo developers. They're just sitting waiting, and they want to be condo developers. They don't want to pivot to rental, and they're just hoping that it's coming back.
The numbers on rental, like, it's not even just that they don't want to, like, the numbers are really tough to make sense of. I mean, you're starting to see it now with GST. So the GST removal helped. DC's Toronto made a proposal. It was kind of a nothing burger. Like, it was just it was just theatrical. I think it's not actually going to do anything. Like, I don't think anybody will use it. But it was basically they just deferred development charges and reduced property tax by 15%. So that'll improve the cash flow a little bit, but still not good enough. The return, like, nobody's going to build for like a 3% yield on cost, you know what I mean, in a 6 or 7% rate, or whatever, even 4.5-5% rate environment. It's just like it's not how it works, right? So that's where we're at this point.
And that's the supply side, right? That's creating housing units. So if you're saying nobody's building housing units, maybe we could talk too about the other side, like the demand side, what you're seeing, because that's the population growth. You talk a lot about that as well. Yeah.
Well, so you mentioned, we're seeing population growth slow. I mean, it's like we're going from 100 miles an hour to 95 is kind of my opinion. So yeah, it's slowing, but that's if you believe that the government is actually going to follow through on their targets. Like, do you think they are? Like, every time they've announced, here's our immigration target for this year, they've overshot it by far. And then when you count in, you add in like, non-permanent residents, everything else. So they're talking about, so I guess 2 questions. Government's talking about reducing immigration overall and some caps on foreign students and stuff. Like, A, do you believe it? And B, do you think that will have an appreciable effect on the real estate market?
Yeah, so I'm actually of the opinion that we're already seeing the impact of declining population growth in the market right now. So we've seen prices and rents both falling for the better part of a year now. And so let me just try and frame this correctly. When the government first said, actually, let's go all the way back to when interest rate interest rate hikes started. When interest rate hikes started, the government announced the foreign investors or foreign buyers ban. Short.
Yeah.
So, and this is a trend that I want to just acknowledge here. And then shortly after international student, we're getting data from India, which is the largest stream of international students heading into Canada, that applications from India were down like 40% to come to Canada because people were disappointed with the experience, the job prospects weren't as good, et cetera, et cetera. The story is probably not something I need to explain. Everybody's pretty familiar with it. And then right after that data came out, the government came out with this foreign international student reduction policy. And so and now fast forward to present day, we're seeing a reduction in both temporary foreign workers. They want to bring the non-permanent resident population down so the population would actually decline by 0.2%. I don't think they're going to be able to achieve that goal, but just bear with me here. And then they're going to reduce the permanent resident applications, new permanent residents to Canada by, I think, 100,000 as well. And so what is likely happening, and if you go back to the 90s, is organically, as the economic prospects of Canada eroded in the 1990s, people stopped coming and people started leaving, right? Temporary foreign workers who were here who said, if I'm going to have this quality of life, I'm just going to go back to where I was and have the same quality of life, right? If I'm not going to have a job or whatever, I'd rather be around my family. I took a risk to come here. It didn't work out. I'm just going to, cut my losses and return. So you saw a lot of that. You saw fewer people wanting to go to Canada in the 1990s because the economy wasn't good. What do you do when you look to move somewhere? You check for jobs, you check for apartment prices, etc. Imagine being somebody right now moving from anywhere in the world and looking for a job in Toronto and looking for an apartment in Toronto, right? I mean, realistically, right? So you punch the numbers into your calculator and you're like, okay, can't make this work, not coming. And so that's what we've been seeing happening for the better part of a year now. And again, StatCan, like Q3 population growth data isn't out yet, but I would imagine the government's seen it, right? And so when we see Q3 population growth, they're going to say, oh, look, our policy's working, even though it came out after Q3, right? And so this is my perspective. It's smart policy. Like, I get why they're doing it. It's very easy for them to take credit for when the data lags by a quarter, it's very easy for them to take credit for a trend that they can identify in the data that's just happening organically in the economy by saying they did it from a policy perspective. So that's what I think is happening. I don't think we'll see a 20 basis point reduction in Canada's population. And the one thing that I will say is Benjamin Tao acknowledged that the Statistics Canada, we were miscounting our population by like 1.5 million people. So they lost like 1.5 million people in Canada that they don't know if they've left or if they're here or whatever. It would be very easy for that to also be a phenomenon, right? Where somebody says, "Oh yeah, I'm gone, I'm out of here," and they rescind their visa, and then they just don't get on a plane and leave, right? So I think you'll see some mix, right? So you'll see some of it will be people who looks like they're leaving as a data point. Some won't.
That's wild.
Some will. Yeah, isn't that crazy? Yeah. Anyway, so
we got to send our government back to kindergarten to learn how to count or at least keep track of stuff. It's like
how to get along with other people. Hey, just quickly, Benjamin Tao, is he not like, I don't know, is he like not one of the best analysts, what you would call him out there in Canada?
Yeah, he's an economist. Yeah, Ben Tao's good. Yeah, he's. I just find him really enjoyable to listen to. He's just very funny. He's got like a really dry, funny sense of humor.
Yeah. No, I like it. Sorry, got off track there.
No, it's all good. Yeah.
So,
I don't know if you saw. I think it was on Twitter, and I think it was Table Salt. I don't know if you're familiar with that. Use. Is that you, by the way, Dan? Is that just your angry alter ego?
So many people ask me that.
But he shared something about LMIAs, and I can't remember the time frame. It was like first quarter of the year or this year or something. But LMIAs outpaced actual employment growth. And so there's more of those created than... I'm sure you saw that.
Tell people what LMIA stands for, Mark.
Labor Market Impact Assessment, which is basically like it's you can bring in a foreign worker if you can't find any Canadians to do it. So really most of them are fraudulent, in my opinion. I'm not putting words in your mouth, Daniel.
But they have a scale, right?
Most of them are people just buying jobs here in Canada or non-existent jobs. So the question then is like, is there fraud going on? Because how can we have more LMIAs than actual jobs created? Like,
right.
A little crazy.
Yeah. I mean, well, I think, it's pretty evident that fraud has been taking place at a massive scale. I would say that, and this is again why you're seeing people not wanting to come here. Like, it's not just like there are so many victims here. There's actually like no, like, you know what I mean? Like I even think the government ends up being a victim of this thing, like that, because like they've totally messed themselves up on the policy. Like, nobody trusts them anymore. But like, you know, the people moving here are victimized by it, right? The employers whose names are put up by these like fake consultants who are doing the fraud, the local labor market, right? That's now flooded. Like, there's so many different like layers of this where nobody wins. And so yeah, anyway, like for the past 4 quarters at a minimum, and I think it was Millennial Moron actually from TikTok, he's an awesome guy, but he put out the chart originally, and like I think the Q4 there was like no jobs created, like zero almost, and there was like 50,000 LMIA things issued. And so yeah, like obviously this is, and then you hear about these other cases like where people are paying, like they're literally paying money to an LMIA, and again, like it's not small companies. Like these are like franchises of like, that one was like a Turtle Jacks that happened in a CBC news article. There's been like Tim Hortons franchises, etc. So it's, again, like these are massive multinational corporations that are getting wrapped up in this scheme that's happening in Canada. It like, to me, I just, the part that really upsets me about it is like, it is going to take us 20 years to recover, if not more, from like reputationally from all of the things that are happening in our economy right now. When you combine this with like the money laundering, right? Like TD just got hit with the biggest money laundering fine ever in history by the US DOJ. Like, you know, that our banks can't even really properly operate in the US at their money laundering standards. You're getting like snow washing. Now you're getting like a lot of this foreign interference in Canadian elections we're hearing about from multiple different countries. And so it's just a very scary and like sad place to think about that. Like, I think we're very close to like peak like despair of like this being a very difficult time for our country, but it is like a really big uphill battle. I'm excited to be a part of that. Like, a lot of people think that when I talk about this, I'm like anti-Canada, and I'm probably like the least anti-Canadian, or sorry, I'm probably like, I love this country more than anyone, honestly, than anyone that I know. But the challenge is like that's going to be a really, really big undertaking for us to overcome all of these like problems that have been created over the last couple of years. So
you're an optimist, but it's going to be a lot of work.
Well, I'm here for the heavy lift for sure. Okay, yeah, I mean, I'm optimistic that it'll get better, and I think that like, look, like life is very much about the journey of it, right? And the process of doing all of that is going to be profound from my perspective. It's just like, so it's, you know, you can't give up. It's just it's interesting.
Like the more light that you shine, that seems to be shine on these issues like fraud, and we talked to Sam Cooper on our podcast a couple weeks ago, and it just all of a sudden you open your eyes to all kinds of things, and you're like, wait a minute, if this is going on, like what else is going on? And then
for sure,
okay, what data can we trust, and what is the real estate market built upon? And if you're going to make an investment, because we're all about stewardship, right? Okay, if I've got some money and some wealth sitting around and I want to actually put it to work and be a bigger blessing to the people around me, like what can I do? What can I rely on? And I don't know what you would have to say about that, because you do look at data a lot more than I do, but like you also see the narratives that are out there as well, and maybe the two conflict sometimes, like, you know, the public narratives or even narratives on social media, and then what the actual data is saying are two different stories. I don't know.
Yeah, it's tough. I mean, a lot of people don't even trust the data that's coming from like your, you know, the StatsCan or the government or whatever right now. And like, I can't really blame
do you trust
them.
it?
and so, yeah, I mean, even if you're using like data points, it's kind of difficult to know whether or not you're actually getting the right information. I think that the things that I would watch, like, I think Canada needs to go through a deleveraging. I think that's probably the most important theme from my perspective, is like we have far too much debt. And so that's probably the thing I would pay the most attention to. That and I think unemployment. Like, I think especially with, you know, when we talk about that condo thing that we were discussing, like the knock-on effect of not condos not selling, if we have a 70% reduction in pre-construction sales today, what that means eventually we'll have a 70% reduction in construction activity in the future. And that's a very, very scary thought for the construction labor market. And so, I think that unemployment is probably one of the biggest things that I'm watching. And then for reliability of like, how bad is this going to get? And then once that starts to recover, that would probably be the leading indicator that we would be in a bit of a recovery. And then are Canadians, are they like going bankrupt quickly? Are they deleveraging? Are we seeing household debt to disposable income come down at all? Those are really the most important things.
How close are the average Canadians to bankruptcy? Like how close are they to not making their payments?
I don't know if you have any figures on this, Daniel. We didn't didn't give you any of these questions beforehand, but
okay,
we talk about Canadian debt, and some people will just say, well, look, it's all mortgage debt. It's not a big deal because people are always going to pay their mortgage, and if not, like they'll find ways to work it out, the bank or the government or whatever. Like, does that square with kind of what you're saying? Because typically we think about debt and we think about like bad debt. Like, well, not that a mortgage couldn't be bad debt if it's a bad investment, but we think about like credit cards and stuff like that. But is the majority real estate? And then building on that, like, I think we all can acknowledge, even people who work in the real estate space, is that we rely far too much on real estate in Canada, right? It's just it's like the snake that eats its tail, right? Like, so
yeah.
Can we, like, would investors consider like, hey, maybe I shouldn't invest in real estate, but I'll invest in a business or something. And then, we get into regulations and red tape and why we don't have any, research and development happening in Canada, but I don't know if you want to riff on any of that.
Yeah, I think you made some excellent points. I mean, from my perspective, like there's a couple of things. Like when I describe the recovery that I think will take place in Canada, diversification of the economy is like at the heart of that. Like we need to get away from housing being the primary driver of our economy. I mean, for a country that is so concentrated economically in housing, we should not be so bad at building housing and providing housing for, honestly, like for a population. You know what I mean?
I'm going to quote that and send it to our officials.
Yeah, of course.
This is all we do, and we're not very good at it.
Yeah, it's crazy from my perspective.
It's like a crown corporation.
Yeah, but no, it's okay. Yeah, but so I think like you're going to see some diversification into resources, oil and gas. I think I mean there's so many areas where you have a purely capitalistic economy beneath us geographically that is basically taking our resources and refining them far better than we are, and so like that would be oil, timber, even electricity, certain things like that, where we just aren't being competitive with our own resources, and we need to do that, I would say, especially when it comes to like battery metals, semiconductors, commodity metals, etc. I think that those are all sectors that Canada can obviously play a massive role in the global, as well as like fresh water, etc. So that's probably one thing. I think housing, I honestly think we do need to make it, like, I think one of the keys to fixing that problem is, right now we don't have a capital gains tax on the primary residence, and I'm not suggesting that we should, but like it is encouraged us as Canadians to lever up and buy the biggest house that we possibly can, realistically, right? And so that's obviously a problem among the debt, but we've just built this like debt-based society. Like car dealerships make more money selling debt than they do selling cars, as an example. Like the whole used car dealership space.
Do you think that's just Canada, or do you think that's like worldwide? So
I think Canada is unique in such that like we have this like credit system that's a little bit more different than a lot of the other places, where like just the way that we have like the whole recourse environment, as an example, like our real estate loans are full recourse. In the US, very much they're not, right? So if the lender has to underwrite the deal, whereas here they're underwriting the person who's buying the deal, and so they don't really care if you overpaid for the house, and that can actually cause a bit of a push up on house prices, right? Because you are the recourse, like you're the security of the deal, not the house. In the US, they underwrite the deal because they don't have the security of you. If you stop paying, they're getting the house back, and they don't, they don't want to be underwater on it, so they're more likely to underwrite a bit better. So that's piece number one, but that kind of translates over to auto loans and such, that like in the US, maybe this is just an observation, but in the US, like whenever I've traveled in the US, I would say that like the percentage of vehicles that I see on the roads that are brand new is like got to be a tenth of what it is here in Canada. Right. And again, that could be climate. We have salt all over our roads, et cetera. I don't know. Like, I'm just trying to give people the benefit of the doubt, but I think my guess would be,
everybody in the GTA is new. They just need a car. Like, they just got here.
Yeah, that's true. It could be that too. But I mean, they could buy a used car. Like, you know. So this is the thing. So that's kind of one of the other things. Like, and so I think everything's just kind of become based around credit. Like, you can finance furniture, you can finance an Xbox, blah blah blah, like everything, right? And so this debt burden, I think, is just mounting, and so getting away from like consumers feeling like they should just be going levered long on like household expenditures is probably, from my perspective, so it seems like a cultural shift that needs to take place in Canada. That's like otherwise we're just going to basically become like a society and in like indentured servitude forever, and you just can't grow that way.
Dude, you're speaking my language. We've been beating that drum for a while. Like, let's get on the natural resources, right? Let's stir people to get out there. And
what's in our way? What's stopping us from the natural resources?
What's that?
Like, what's stopping us from getting into the natural resources and using that, diversifying?
The government.
I know, but like
policy environment's not super helpful.
Don't they see this data too?
The policy environment, fine. I just call it Trudeau.
I have to be diplomatic here, but yeah, it's the government, right? I mean, realistically, like, I think it's that they're long run projects. I think that like it's hard to get, and you need like we don't really have a domestic company that is capable of taking them on. So like if you look at the biggest potash one that took
it's
place
almost
in
like no
Saskatchewan.
Wonder we don't have one because we haven't been investing in it
for sure. Yeah. Well, we also run like an oligopolistic economy here, and so it's not like people are super incentivized to come here because it's not an exceptionally competitive market. So, you know, like again, like regulations, economic structure, et cetera, are kind of prohibitive for you getting the most out of running a business here. And that's before you even think about like tax structure, right? So like capital gains tax, income tax, et cetera. But like just our economic structure doesn't, like if you're going to go start a bank, and Canadian banks have realized this, if you're going to go start a bank, it's probably better to do it in the US, right? Than in Canada. Like, I mean, you have 5 banks, 5 telcos, right? Like pick any industry, you got like 5 utilities, infrastructure providers in the condo construction space. You got 5 major construction managers. Like any market that is meaningful in size in Canada is an oligopoly. And that's just not a good way. If you want the consumer to win, then that's not a good way to run an economy.
Well, that's one thing I've noted. You know, you talk about the U.S. and I've kind of been preaching like, if you want to be in real estate, go do it in the States. You know, so we just got a place down there. And that's one thing you notice when you go through towns or even cities, a lot less of the big franchises. Like they still exist, but like, you know, if you go to a small town here, there's going to be an LCBO, a Tim Hortons, a Wendy's, a something else in that strip mall, right? And it's all going to be sort of the same group of companies, whereas in the States, way more individual family run, restaurants, businesses, whatever. I mean, also there's, you know, a lot more of them fail, but that's the American dream. But going a little bit off
we also don't have very many families
here. I'm thinking of Norway, and I think it's State Oil, where they have they do their own natural. I mean, there's other companies too, but they do natural resource extraction, and they have like a massive sovereign wealth fund. Like, I don't know. Would you be?
It's the biggest one in the world, isn't it?
Yeah, I believe so. And I mean, it's Norway. It's not a huge country, but wow, could we do something like that? I'm not in favor of. Like, I think the less government, the better. But in this case, I'm wondering, like, if we had something that could actually be run properly, like, wouldn't that be an awesome thing for Canada, where we could, like, extract our oil, refine it, and then send it, I don't know. Maybe it's a pipe dream, but...
No, I would agree. Like, I think it would be amazing. I just don't know. I mean, the challenge is, like, I guess maybe if we were going into oil, it would actually help because you have that petrodollar status and it would kind of like strengthen that for Canada. Like we would be able to raise capital if it was for an oil related project. But I was going to say, like, with what money would we undertake a infrastructure project of that scale? Because like we're just
print
like,
it.
Yeah. I suppose. I mean, but I think we're getting, but like, and especially as somebody who's investing in the U.S., you're probably realizing this. Like, we're getting to that kind of CAD devaluation phase of like your dollar CAD is the worst it's been since COVID, I think, right? So, like that's where, and we don't have a manufacturing base to benefit from. Like in the 90s when dollar CAD was where, was horrible. I think it was like one of the worst periods. We had a big manufacturing base, so we could export goods, and it actually like helped us in recovery. Right now we don't have that. What are we going to do? It would be resources. Like resources would be a great answer to the question, but we're not, we're not necessarily equipped to capitalize on a discounted dollar.
Yeah. So you're saying like basically when the dollar's low, you want to sell things or basically it's cheaper for other countries to buy your stuff.
Yeah,
but
so
if you don't have anything to sell, if you don't have anything to sell or anything,
we'll sell them condos. It's all good.
Yeah.
I know.
Did we change the foreign buyer stuff to
like China did this for years, right? Low currency, you buy stuff for dirt cheap. Maybe we should buy some Chinese condos. But I mean, I think it would make sense, if we look at, depending on what happens with the states, right? Are they going to increase, like with the next election, are they going to be a little more isolationist and increase their own manufacturing base? And if they did, like there's a perfect opportunity to just send resources, like boom, just south of the border. You guys, we'll send you the raw materials. They also have a lot, but they'll need more. Anyways, it's just...
I guess it depends on the outcome of the election, right? I mean, I think TD actually put out a paper on it a couple of days ago. It's called, just says Trump tariffs, a trade Canada doesn't want. And they basically just illustrated like the potential decline if there was a 10% tariff on all exports from Canada to the US, right? And I mean, the challenge is like, it's a double-edged sword, right? Like if we could miraculously overnight create a manufacturing base or some sort of way to monetize a declining dollar, we also buy all of our goods globally in the USD. And so we're going to get imported inflation as well. Like, I don't think our economy we could, there's no way that we could create a manufacturing base or some sort of export economy strong enough that it would offset the inflationary impacts of a lower Canadian dollar. And this is where I think we're kind of heading for a bit of trouble.
Well, I mean, I guess one way you could do that is the government can never do it, but they can incentivize behavior, right? So tax breaks or less tax for businesses, encourage people to start businesses and to do manufacturing. But of course, then people would, Jagmeet Singh would be all over that saying, why are you giving tax breaks to billionaires? So,
yeah. Well, by the sounds of it, like with where polls are, I don't know if it's going to matter what he or Trudeau has to say in a year. So they can criticize all they want, realistically. Maybe he will be the official leader of the opposition at that point, by the way things are going. So maybe he will be entitled to, But yeah, I think like, hopefully you'll see some concessions in that regard. Like I don't think that Canada needs significantly lower taxes forever, but we need to figure out. Well, like I think like I would be preferential to less wasteful spending than, you know what I mean, before taxes. But like it's just not realistic, right?
Well, wow, what a statement! I mean, I agree with you, but to hear it said out loud by someone else, like, yeah, I think we would all prefer that. Well, sorry, I had a really good point, but I can't remember what it was. But okay, you mentioned deleveraging.
That's his dad joke. That's his dad joke for the podcast. Less wasteful spending.
Yeah. No, I mean, I was talking. So I do some property management as well, and talking to an owner the other day, and we're just discussing furnaces, right? He's got to replace a furnace, and like, okay, what do we do? Do we pay cash? Do we finance it? And like, the more I look at it, almost every company that is a little bit smart makes more money on financing than on their actual products, right? Like anybody selling a furnace, they're just finance companies that happen to sell furnaces for in service and stuff. So yeah, deleveraging, like practically speaking, if you're an investor and we know that we're probably headed for a debt deleverage one way or another, whether that's, prompted by credit markets or the government defaulting or whatever, like how do you protect your money, your investments? I mean, you've talked about becoming a nation of indentured servants, and obviously if you hold assets, you're protected a lot against that. I mean, it's almost like people talk about neo-medievalism, right? Asset like serfs and medieval lords, so people who have assets and people who don't. But for an investor, like how do we protect against that? If you think there's a deleveraging coming, and I think probably is.
Yeah, I mean, I would say that being investable, like having either dry powder or liquid something in like, and you know, it could be like dividend paying stocks or GIC or it could be real estate, right? Like we have access to credit to put on. If you're not in debt, it's too late for most people, right? Like it's not like you can get out of debt very, very quickly. If you're in a ton of debt, you're part of the deleveraging. But if you're if you're somebody who was responsible with their credit and will have access to credit during the downturn, then I think that you're going to be well positioned. But I would say, like, for most people, you would have had to position well for this over the last several years. It's probably too late for someone who's levered up. You know, I mean, maybe you sell a property that's like too high leverage or something like that. But I mean, I think having like good solid income, good credit, cash flowing, hard assets, I think is really what's going to be the difference maker for a lot of people. For sure.
Yeah, so I guess they should have listened to you 3 years ago, right? Not now.
Yeah, most people were like sending me hate mail 2-3 years ago because I told them this was going to happen, and then they didn't like that. So most people don't want to hear that. And that's like, it is funny, right? Like as soon as the market actually dropped, my like followers on Instagram, like which is like a good lever for me for realtors, right? Because like realtors, like most of my followers on Instagram are realtors. They just like went up like 3x because people were like, oh, this guy knew what he was talking about. Actually, it turns out. And so that part's kind of fascinating from my perspective. But by that point, it was too late, unfortunately, for those folks.
Well, it's not too late yet. And, my personal, I don't know what you want to call it, bandwagon or whatever, is like, let's have more kids. We talk about immigration and our population growth dropping and resources. I'm like, just have more kids, and that will, that'll take care of a lot of your problems down the road. But most people don't want to hear that. They want some other way to protect against the deleveraging and future things. But yeah, I don't know. Do you have any thoughts on population growth? Like we've talked on our podcast about fertility rates and society, and I don't know. Okay, how about this, Daniel? Let's have more babies. Do you agree or not?
Yeah, no, I'm super into that. Like I'm trying to have as many as I can. So, but yeah. But I look, like we built a society that is really broken in many ways, right? I think people's values are skewed. I think people's the way that they interact with the economy doesn't feel conducive for them to be able to create a family or I think that we like, even, and like there's a psychological component of like, the value of like a traditional relationship or whatever that I think has eroded a little bit. But I think there's an economic component to that as well, where like, a lot of people don't really feel like they can make it, really, like, like there's and the amount of stress that that like finances are always the number one cause of divorce and conflict in relationships, etc. And so I think you're just seeing the consequences of a nation that has been stretched to its limit for so long that, I mean, like our birth rate, fertility rate now is down. It's the second year in a row we just hit the lowest rate, right? And I would say that like, it's not like this is something that we've never seen before. I mean, like there are historic empires that saw their birth rates collapse in similar moments, right? Where basically you reach these almost like bubbles or like points of stress where people can't, like they're electing not to have families because it feels, who knows if it feels like socially responsible or if they don't have a positive outlook of the world and they don't want to bring somebody into that. But like all of those things should be like big red flags for a policymaker or somebody saying, wow, like how did we create this environment where people are so disenfranchised and upset that they don't want to like do probably the most profound thing that a human being can do, which is to create life, right?
It's so like we created a world that no one wants to live in.
Right. Yeah.
It's not good.
Yeah. Yeah, it's sad. It is really a sad thing. I think it's probably the biggest problem for us to face. And I mean, I think it's led to a lot of things where like the government feels in order to replace the labor force and keep the population or the pension replacement rate moving in Canada, right? Because that's the other thing is like we've got 11 million people retiring, you know, and moving on to CPP. Like you have 11 million people approaching the age of 70 in Canada, right? The boomers are like, that's a huge cohort in the population pyramid that's about to have a meaningful impact on our demographics, and somebody's got to pay for all those pension obligations. And
it's just a lot easier to pay for stuff if you can just import mature adults instantly from around the world, and they can be part of the economy rather than have kids and like wait 18 years or whatever. Like you have to be focused on long-term solutions. If you're not, then these fundamental problems
I just think we've seen like probably it's been short-sighted from a policy perspective for a long time, and so now you're seeing the consequences of it, right? And they solve it with more short-sightedness, I suppose.
Yeah, I mean we're on the cusp, I think, of probably a lot of societal change, right? We're at the end of a debt super cycle. I mean, people have argued that should have ended probably 2008. But massive government intervention extended that. But we're seeing sort of the cultural, the cultural ramifications of that now. And it looks like we're in for a lot of change, not just the debt deleveraging, but if you call it a cultural deleveraging. But I think we probably need to wrap up there soon. So, Brent, did you have any final questions for Daniel?
I got one final question.
Oh boy,
what do you think of Bitcoin?
I love Bitcoin.
Okay.
Yeah. I've always been a big fan of Bitcoin. I think the biggest challenge that Bitcoin has is its community. No offense to Bitcoin, but you know, I mean, like it's just I don't know, it's kind of like the condo stuff, right? Like you got a lot of people, and like now you've seen all of the meme coins and stuff evolve out of it that get associated with Bitcoin, right? Like I think that there's like Bitcoin versus like crypto, like it's just been all really watered down. But it's like you know, calling a pre-construction condo a real estate investment to me. You know, it's like they're worlds apart. And it really waters down the true message. So I think that's probably the biggest headwind for Bitcoin. But I mean, myself and my family, we've been mining Bitcoin. Actually, every time I go to record, I have to shut off the miners that heat my garage. So
are you successful too in mining, or like?
Yeah, I've been doing it for like since 2015. So I mean, I don't know, like it's not successful. Like crazy, to me, it's like I take an input decision. We take an input energy, right? Like electricity. You know, I know some people use it from a tax advantage perspective this way, but you know, let's call it a tax deductible input energy, and convert it to a KYC free Bitcoin. I mean, that's what most people who are mining are doing it for, I think, right? Yeah, like, you know, it's a loss on the books, and it's a gain on a piece of Bitcoin that nobody knows that you had because it was mined, not bought. That's why most folks that I know and I know a lot of folks in the mining space, especially in the US, that's kind of the primary motivation.
Yeah, no, that's wow. We got a whole nother episode on that, guys.
Oh boy,
let's do this: how to heat your garage and escape the.
Yeah, I can introduce you to some cool guys in that space if you want. Actually,
do that.
Really good. I will for sure.
Yeah, cool, no, that's awesome. So I mean, we touched on. Well, you didn't say the Roman Empire, but you mentioned empires, and I always like to bring up the Roman Empire when I can. And so we talked about that. We talked about having kids. We talked about Bitcoin. I think we covered it. Do you have any final thoughts, Daniel? Anything that we may not have, or we touched on that you wanted to expand on?
No, I think I'm good. Yeah, I mean, this is an awesome conversation. You guys were a pleasure to speak with. So thanks for having me on. It was great.
Yeah, thanks, man. Where can people find you, Daniel?
Just Google me, Daniel Foch, Foch. My last name is, fortunately, I guess you guys have this issue as well. My last name's unique enough that one Google search will do.
Yeah. Cool. And the podcast is the Canadian Real Estate Investor Podcast.
That's correct.
So we'll send people over there as well. But I really appreciate your time, Daniel.
Yeah, thank you guys too. I appreciate your time. Take care.
Yeah. Thank you so much. And for our listeners, thank you for making it this far. Hope you enjoyed it. And until next time,
steward your wealth wisely. Thanks for listening to this episode of the Two Stewards Show. If you like my voice better, click subscribe.
And if you like my voice better, click share.
If you like both, give us a 5-star rating.
To interact with the show, feel free to reach out at hello@twostewards.ca.
We will see you in the next episode. In the meantime, steward your wealth wisely.